normal home loan takes around 20 years to repay, but some people, because of low affordability and a lower monthly installment, they will prefer to take 25 years or 30 years so that they are able to repay without no issue. Right? But did you know that there's actually a possibility that you can actually repay your home loan in much lesser time than that? You can actually repay your loan in 5 years, 10 years, 15 years, or even less than that, right? Given that you follow some sort of strategies, right? So in this video, that's what we're going to break down. We're going to break down strategies you can use to ensure that you actually repay your loan at a much faster rate, because that will save you a lot of money and a lot of time, right? If you want to know that, wait and watch the whole video. But before we get to that, this is the big elephant in the Korea manage. As you know, in this channel, we talk all things real estate, all things personal finance, so that you are the driver of financial life and not just the passenger. So let's get to it, shall we? Right? So the first strategy that you will need to look at, or the first thing that you need to look at, is to secure the best interest rate. Right? So interest rate is very, very much critical when you are actually getting your home loan, right? Because why is it important? An interest rate is actually the one that the bank uses to calculate your monthly installment. So the higher your interest rate is, it means the higher your installment. And if the lower interest rate, even if it's just a 0.5, it makes a whole lot of difference. So you'll be asking yourself, Taba, how now do I ensure that I get the best interest rate? So I've made so much videos about how to ensure that you have a good credit profile. I'll put the links on the description below so that you see in detail what you need to do to keep your credit profile at a perfect state, so that you actually are determined by the bank as a low risk customer, which means that you get the best interest rate. And another thing is that you need to be able to negotiate with your bank if you already have a bond, right? So if you have a bond that you've taken maybe 3, 4, 5 years ago, go back to the bank and say, hey bank, my financial situation has changed. Let's do a reapplication, see what you can bring me, right? Or if that bank is not giving you something that you can work with, you can always change the bank, right? And see what other bank will give you the best rate, right? But in case you are applying for a new application, you must use a bond originator, right? So the bond originators will apply to all 4 major banks plus SA Home Loan, and then they will compete. They will make those banks compete for you. So that's the benefit of using a bond originator rather than applying directly to the bank, right? So that's what you can use to get the best interest rate. So the second strategy is to make repayment at a higher rate, right? So say that your bank charges you on a home loan, say, of around $1 million, right? And your bank is charging you that for that $1 million, you have to pay 11,000, right? So when you have to pay 11,000, so your installment, let's say, is that 11,000, right? So now you put an extra 2 to 3%. Let's say you make it 11.3 or 11.5 or whatever you can afford, right? That enables you, right, to cut off the interest rate that is charged, because especially in the beginning stages of your home loan repayment, you are actually just paying interest without taking money into the principal. But if you're actually paying that 2 or 3% extra, so it enables you to actually put more money towards your principal, right? Which helps to ensure that you save money and you save years, right? And the next strategy is to make more frequent payments, right? That is very, very crucial, right? Instead of making a big monthly installment, because one thing you must know is that your interest rate is calculated on a daily basis and you are paying it once, but your interest rate is increasing every day. But if you actually divide your monthly installment maybe by 2, by 3, by 4, or by 5 payments throughout the month, right? Trying to pay the same amount, it makes a whole lot of difference, right? What it makes, it actually increases the number of payments that you will have per year. Because if you are paying once a month, it means you have 12 payments. But if you are doing this splitting of the same amount into 4 or 3 or whatever that works for you, right? It increases the number of payments that you will have per year, which now drastically reduces your interest, because now instead of making 12 payments a month, you'll be making 13, 14, 15, 16 payments a month, depending on how you split it. So it's very much important. And on minimum, if maybe you are just paying twice a month on the same installment, it will shave you around 4 years, 4.5 years. That's a lot, right? That's a lot of years. So it means if it's a 20-year home loan, now you pay it in 16 years, which is good, which is good. Now, if you integrate all these other strategies together, imagine what you can do, right? So before we go to the next one, I believe in this channel you get a value-adding information that you can actually use, right? That's actually empowering you, right? So please, man, if you have not already subscribed, please subscribe. And thank you to those people that keep supporting this channel, that subscribe, that likes, and that watch my video and they share the videos. But let's get to the next strategies before I get overexcited about your subscription. But I know you just hit it now. I see you. Okay, so the next one is pay in those lump sums, right? I'm sure where you work, right, you get those annual bonuses, right? What do you actually do with those bonuses? Do you take all of it and you splash it during December? You come back January, you eat cabbage. I mean, I'm not saying that you should not enjoy yourself, but I mean, you can just take some portion of that money and then put it into your home loan. That it makes so much difference, right? And I know some of you, actually I got so many people that were refunded on tax. I mean, you didn't budget that money. You were not even expecting that money, for example. So for something like that, you can just hoy there. It makes much of a difference. You'll thank me one day. So and as I said before, you need to take note that early in the years, right, when you start paying your home loan, you're only paying interest, Baba. So if you do all these strategies early on, you are cutting interest drastically, right? You are cutting interest drastically. So you need to just look at that, right? The next strategy is to consolidate your debt, right? What is consolidation of debt? Actually, the best kind of debt consolidation, it's with the use of a home loan. I don't think there's any other best debt consolidation there is that actually makes a difference. Okay, for example, there's a video I've made on what is the cheapest kind of debt. I'll put this video link on the description so that you can have a look at it, right? Because on that video, I make a comparison of between credit card, personal loan, home loan, and vehicle finance, for example, right? And what you will notice is that credit card is the most expensive kind of a debt that you will have, right? Because in terms of interest rate, they will be charging you something 25% or even more, right? But if you look at a personal loan, they will be charging you, let's say 17% around, right? Vehicle loan, maybe 13, 14%, right? So all of those are a bit expensive. But if you look at a home loan, you are looking at a prime which is 11.25%. So if you are comparing with the rest of those, you can it doesn't take a genius to see that home loan is the cheapest kind of a debt that you can have, right? In terms of what you pay in interest, right? So now, if you have so much debt on other things, like if you have credit card, personal loan, and you take all those debts, you consolidate them into your home loan. Now, imagine what you save there, right? So it's something that you really need to look at, right? You really need to look at that. The next strategy is to use your bond account as a savings account, your home loan account as a savings account. Think about it, right? Think about it. So if now you go use the bank against themselves, because they will charge you, let's say, that 11.25%. Now, what if that 11.25% is what you are getting now? You just reverse it. Because if you take in a savings account, how much would you make? You make around 0.2%. But on a home loan, if you take your money and you deposit on your home loan, how much do you now make? Because the same amount that the bank is charging you for interest is the same amount that you will now be charging them in a way, or you will be now making. So this is another thing that you need to look at, to take your money and saving it into your bond. It makes a whole lot of difference, right? I hope this video has answered some of your question and is empowering, right? And is ensuring that it makes your life better, because that's what we aim to achieve by these videos that we make, to ensure that you improve your well-being, you improve the well-being of your family, right? But don't forget to share this video with your friends, with your family, so that they can also be empowered. It is the big elephant. Ndo Korea manage. Cheers. Macro!